Greetings, everybody, and a warm welcome to this meeting on the expectations from the union budget. This time it's from the perspective of the family businesses. Family businesses, as we know, are crucial for a country like India, like some of the other important geographies like Europe and Japan and others, where they play an important role. And in Indian context also, they have been playing an important role. There is, of course, the broad spectrum here. At one end, there are the ultra high net worth individuals and big major families. Some actually, there is an estimate of 2,000 odd people sitting on 10 lakh crore worth of investable wealth. And on the other end, there are small MSME players. All of them drive the Indian economy. So what can they expect from this budget? And to help us understand that in terms of what specific provisions they would like in the budget, we have three prominent leaders from this sphere, which we could, who are really the intellectual engines in this space, who understand this space well and have seen the entrepreneurship as a segment grow in this area. We have Ms. Soumya Rajan. She's the founder of Waterfield Advisors, a multi-family office, and has been an expert in this space for a long time, and deals with over 80 business families and manages assets worth around $4 billion or 30,000 crores or thereabout. So thank you so much for your time, Ms. Soumya. Really fortunate that you've been able to give us time. We also have Mr. Gopal Srinivasan, Chairman and Managing Director of TVS Capital Funds, and a highly regarded go-to expert in the family business arena. So thank you so much, Mr. Gopal, for your time. And we have someone who any discussion on family businesses can never be complete without, and that's Professor Kavil Ramachandran. He's the go-to guru in this space, and he's the executive director at the Thomas Schmidheiny Centre for Family Enterprise at the Indian School of Business. I hope I got the full name correctly, Professor. And he's the one that who has, since the start of the Indian School of Business, I think he's been part of the founding team and has actually worked with several companies and has a deeper perspective in this space. Thank you so much, Professor, for your time. So if I may begin with you, Professor, for our viewers' interest, if you can just give us a sense of how important family businesses are in Indian context.
We have about only 7,000 of the firms are listed out of the lakhs and lakhs of companies registered in the country. And our research shows that 91% of them, with a very strict definition of family business, 91% of them are family controlled. And which means that if you take the rest of the economy, rest of the business sector, most of them are family controlled. And so the businesses which are not family controlled are either public sector, some of the multinationals, but some of the multinationals have parentage in family business. And then there are entrepreneurial ventures. But most of the entrepreneurial ventures also tend to become family-run, family-controlled business when it comes to second generation. So any measure, any budget, or any discussion will be incomplete unless we cover this. So there must be measures to understand. Second is to protect and preserve and protect their prominence, their activities in the Indian economy. And I would say that from that angle, there may be incentive, there may be taxation possibilities, but overall, it should be keeping this as a major focus area.
Mr. Gopal, actually, you had, in our interactions earlier, you had mentioned that about the sustainable framework for family businesses, as you had put it, actually. In your view, seen from that perspective, what do you think the budget can actually do? What are you looking for waiting in this budget?
Kumar, thank you again for having me here, and that too in such august company with Professor Ram and Soumya. Couple of quick things. First is this budget. In this budget, I think the most important thing they can do for family businesses, and by that I mean including startups and grow-ups, as we call them, and stand-ups and store-ups into listed markets, the 4 stages of any growth. I think we need to make sure that risk capital is not punished by taxation. Fundamentally, you can sell a listed share with a 1-year hold at 10% LTCG and 15% surcharge. effectively, if you have a unlisted share, typically, which is what most family businesses are, we only talk about those listed in the BSE 500 or the 250, but most family businesses, 90% are unlisted. Imagine that anytime the startup investment or a family member sells a share or somebody else, they pay effectively double that tax. You take 20% indexation, then knock off indexation, 37 or 36% surcharge. I think it's 37 to be precise. You're ending up paying at least 22% tax, even if it's prolonged. So fundamentally, why would people who take risk and then sell get punished when people who don't take risk and just hold for a year get rewarded? I think that anomaly, that asymmetry, that dystopian reality has to go. This is a nation where everybody agrees, and I would say agrees violently, that the culture and the society is built on family business. There's no disagreement in that, right? Yet, when it comes to law, and I don't know, maybe the law was written by Sir Thomas Macaulay or any such individual who has done more damage to India than most people. That law does not recognize the word family business. Let's take section 47 of the income tax code. There are 19 items there which said transfer is not recognized, a transfer of shares is not a transfer for the sake of taxation. 19 items, right? Item number 20 should say any movement of shares in the course of a succession or settlement in the family business. Why is it not there? So the resilience, the sustainability can only come if there's intergenerational transfer. Second, you go to Companies Act. There is no recognition of a family business in the Companies Act, right? Of course, now we have LLP like the German KG, but there is no recognition that there is a family business, and family business will run in a certain way. And maybe people will take more responsibility, more liability. LLP of some kind is there now. But I think the family business M&A which takes place should be completely exempt, because families will constantly split a company into, say, Soumya, my daughter will take this, Ram, my son will take that. These things should be made very flexible as long as it doesn't go outside the family in terms of real transfer of economic. Two things need to happen. This budget, hopefully risk capital will not get into listed shares. Future, the word family business will be in section 47, I'm hoping item number 20, transfer of shares between individuals in a family, or reorganization to M&A when there is a family succession. I hope the company law will also change to recognize the idea of family businesses. So this will be my short and long-term expectations, that the culture, society, and law will all sing together. I'm not talking about the TVS group reorganization. I'm talking about the small and mid-sized family business who's unable to transfer and split their shares among the children, because when you go through M&A, a tax person will send a notice. And a tax person is doing their job. He or she, I don't find fault. But if the tax code said family business reorganization exempt from transfer, then there is no issue. So we have to make family businesses sustainable across generations. Of course, if people sell their business, they should pay the normal tax. I don't think there's any issue.
That is true. Your views, Ms. Soumya, before I come to Professor Ram.
So thank you, Kumar. It's wonderful to be able to be part of this panel and talking about what family businesses are probably expecting from this budget. I think just to carry forward a little bit of what Professor Ram shared in terms of why is this segment so important. In terms of 64% of our companies are actually family-run businesses at the end of the day, and it employs close to about 40% of our workforce. So this is not a segment that can be ignored. I'm going to use the family business fairly synonymously with the MSME segment, because a bulk of our family businesses are MSMEs. But two interesting points here. One is that I think the segment as a whole is actually one which is extremely resilient. So if you look at the fact that we've had almost 3 different kinds of economic shocks over the last 4 years, we've had demonetization in November of 2016. We've then had a GST rollout where a lot of compliance has been thrust into these businesses, and we've had COVID. And despite all that, you still see, the family businesses in some way going to have to pretty much be the beacons to carry India forward. You would think that the budget does need to address this segment, and it is an extremely important segment to address. But what we've also seen in terms of statistic in this business or in this segment is that if you looked at the Nifty 50 companies, they've been growing at earnings of about maybe 2 to 3%. And that's been over the last 3 years. It's been actually much lower than our 15-year average, which is actually near a 9 to 10%. But forget about that. Let's just look at the fact that between FY 19-20 and FY 21, your Nifty 50 is growing at 2 to 3% earnings. But overall, India's GDP is going to contract, as what RBI has stated, by minus 7.5%. So where is that squeeze actually coming? It's coming in this segment. It's coming in the family business segment. It's coming in the MSME segment. And therefore, what the budget needs to do is focus on this, because it's not the large corporates which are hurting as badly. It's really this segment which needs the focus. So looking at, a little bit about the point that Gopal raised about sustainability, we are looking at sustainability of the family business. Now that means two things. One, how should family businesses survive the pandemic? Because that's the immediate problem the budget has to address. And the second is, how will it thrive in terms of its growth post-pandemic? If you look at the first bucket, which is really just the survival of the family business, one of the crucial things for the MSME stroke family business segment is really the flow of credit and cash flows, because without those two, the businesses will find it very, very hard to survive. So what you would want from the budget is to say that just as they had, the 3 lakh crores kind of support in terms of credit guarantee schemes that they had last year, could they have a similar scheme which comes out in the budget this time? Last time they precluded it from, let's say first-time borrowers. If you hadn't been somebody who'd taken credit before, you couldn't avail of that at all. So the question is, could we have a scheme like that? The second is also to look at this whole concept of the free flow of credit. If the free flow of credit needs to happen, the RBI Financial Stability Report actually spoke about NPAs could, kind of become 13.5% by September of this year, as compared to 7.5%, which was in September last year. Now, if it means that banks are going to find it difficult to lend, then what's going to happen in terms of the flow of credit to these businesses? So the concept of the bad bank necessarily needs to be created, and created faster. You could also happen that you could do it in some ways from AIF structures, because those are much more easy to set up. And in that case, you'll at least have capital which goes into public sector banks, or otherwise which the government is planning to do. You could then at least make sure that the credit reaches where it should reach. So I think these are two things that we would necessarily need to look at from a survival point of view: the free flow of credit and cash flows. Cash flows, delayed payments to MSMEs has been a traditional problem. That, I think government even put a penalty in to say that you have to pay 1% per month if you delay the payments for more than 45 days. But what we see is that even now, over 50% of the payments are delayed more than 60 days. So that's not helping the MSME segment or the family businesses. So do we need to have more punitive measures to make sure that the payments actually reach where they need to? So those would be some of my broad comments on survival. I suppose we could always, come back to, what is it in terms of the next phase? But back to you, Kumar.
Yeah, thanks so much. Professor, any thoughts on this, but also specific to you, actually, since you mentioned about, you had this concerns around this inheritance tax, which was there, which is one issue. Whenever I talk to anybody in terms of the expectation from the budget, I think this issue of inheritance tax does emerge. What are the fears? What do you have views on that? And apart from the other things discussed so far?
This is an opportunity for the finance minister to set at rest the speculation about the inheritance tax, and say that in no uncertain terms that we are not going to introduce inheritance tax in India. And there are very many logical reasons for that. One is that it is not a universal tax. It is selectively implemented. Even in the OECD countries, which are the richest countries in the world, many of them don't have. Even if you take the US, many states don't have. And many part of the world, inheritance tax has been abandoned. And also because the administrative cost of implementing this is very high. People don't seem to understand that. Okay, and at the end, what you find is that the net income, net revenue generator may be peanuts. And if you look at the country, India is a poor country. Let's all admit, in terms of GDP, we may be on top of the world. But if you take the per capita income, it's a poor country. We cannot afford to disturb the wealth base that should be the engine of growth, given the importance of family business. What the government should do is, instead of coming with a knife or a pistol and say that we want to encourage you, we want you to invest, encourage the family businesses to invest their wealth. Instead of investing in dead properties or other places, encourage them to diversify their wealth. And many people have suffered. I mean, if you take the pandemic and its consequences, April, May onwards, many family businesses have been affected because many of them have put all their wealth in one bucket. Instead of that, if the government can incentivize diversification of wealth portfolio and encourage them to understand that wealth management. Soumya is an expert in that. Gopal is an expert in this area. So there are so many experts available. What is required is to facilitate this kind of a transformation. And families should be incentivized to encourage in terms of investing outside the traditional business. And which is also important. If I connect with what Soumya said, many of the MSMEs are stuck in the traditional business. If you encourage them to diversify, it can be in a wealth fund, it can be an angel investment, it can be something. And there are various ways of defining that. I think that is very, very important. Instead of inheritance tax, why don't we have an inheritance fund, which means that the families can continuously create a wealth to invest, and that should be encouraged, that should be indexed, and should be supported by the government. There are a couple of other areas where the government can do, or the finance minister must focus on. One is women. We have all kinds of acts, but at the same time, if you look at the country, the news channels or anywhere, women are disrespected across the spectrum. It's not only the poor, uneducated people. If you look at the corporate, if you look at the other unorganized sector, everywhere, the respect is not there. There should be mechanisms to encourage education, facilitation of this. And I would think that women from business families are well equipped, well qualified to facilitate that. So the finance minister must come out with some scheme to facilitate this this kind of a transformation. And that will also make the women in family businesses to be the change agents, not only in their business, but also in the society, which is making the stewardship orientation of the family businesses strong. There is also one other thing. This can be connected with the philanthropy. The CSR funds are not properly utilized at this stage. Okay. We know, we are aware of the misinterpretation of the provision of CSR for political purposes or somebody's specific private requirements. What is possible is to encourage family businesses to channelize the CSR, and either the women or others can be involved in that, and specific social development initiatives. Okay, just my final point is that governance is still a big issue. In spite of all the reports we have had, the past 1 or 2 years, if you look at corporate governance has come to an abysmal level. There must be some encouragement given to companies which are following high quality corporate practice. Give them incentive and a tax break for companies which are scoring something high on corporate governance, and especially the medium-sized businesses. And there, I mean, as Gopal said, unlisted companies are not taken care of, are not looked at. So there must be corporate governance index for these companies also. There are very many possibilities.
I think, Kumar, this budget is going to bring additional taxation because there is a big hole in the government. So I don't think they will do anything which will hurt sentiment like inheritance tax this time around. If they will do it, they'll do it later. I think what you should be prepared for in very simple ways in the budget is maybe a COVID surcharge, maybe an extreme step of two budgets. One budget which is separately carved out to deal with COVID, vaccination, refinancing the MSMEs, and all these schemes that they gave to help people out, especially the daily wage earners and the people who had hawkers, street hawkers, and so on. Did some good programs. So I think that may be one other way. I'm not too worried I don't get any relief in this budget. You'll probably get a larger tax, maybe all around, maybe it's for a year or maybe it's for two. And this unpleasant practice of the state, of the central government levying cess, which they don't have to share with the states. So in my mind goes against federal democracy, has been increasing. So I think that you'll see probably more of that, unfortunately. Not too worried about this budget. My only goal in the long term is that statute, law, legislation must recognize the word family business. In the Company Act, there should be an act for family businesses and including how they expect them to be governed. We have a one-size-fits-all solution when it comes to listed companies, which is fine because you're involving the public. But for unlisted company, also you need governance. And you need to define how a family business can manage its succession. Kumar, as you know, and I think Soumya knows best, tax deferral is a very, very important source of wealth for all investors, right? By staying locked into that position for 20 years, you're essentially deferring tax for 20 years. But when people die or people settle their business and partition it among the MSME business, there is a transfer of shares. So I think recognizing and allowing those transfers to happen in a tax neutral manner and is, I think, very, very critical in the long term. So I would only say two things. The short term encourages capital, make sure unlisted shares are not taxed so heavily compared to listed shares. So people realize that let's not give our money to a portfolio manager in the public market. Let's put it in our own business and make it grow. I think that's important. And also the message sentimentally, risk taking is punished. It's not a nice sentiment. And we have a prime minister who's been a visionary in terms of encouraging entrepreneurship.
One of those issues which is fairly significant, which both Professor Ram and Gopal did kind of in their own way touch upon, was really that you need a predictable, consistent, stable tax regime. The flip-flops that we seem to do, even on a very simple thing like investing, you have different criteria for long-term and short-term capital gains for different asset classes. For equities, long-term capital gains is 1 year. For unlisted, it is 2 years. For debt funds, it's 3 years. At the end of the day, you're kind of trying to figure out and piece through this, and every year something new may pop up and just come in, as a result of which whatever planning you've done in your investments, your business or otherwise, just goes through a complete toss. So I think what you're really looking for is a certain amount of consistency, predictability, so that whether you're planning for inheritance, whether you're planning for your business, whether you're planning for transfer of shares between family members, it's predictable. You don't want to see every year something new happen or something new change. The second was really to a point that I think Professor Ram raised on women. I think very important that the budget does have something for women entrepreneurship. What one does see is that most women entrepreneurs it's actually a subscale operation. Most of them tend to be solopreneurs rather than necessary entrepreneurs that have more people who they actually employ. So, and that comes as a function of two things. One is financial literacy, and the other is financial independence. So while they overcome that hurdle of financial independence, they get stuck at financial literacy, which really comes in the form of how do I raise capital? How do I even scale my business? How do I understand what the bank is telling me to do? So it would be great to see some kind of incentives which come through for women entrepreneurs specifically, because they are beginning to play a larger role in family businesses and outside of family businesses as well. So I would think that that's an important aspect that should get covered in the budget. The workforce, we are 50% of the population, and therefore, however, our labor participation is in the early 20s, which is ridiculously low as compared to other developed economies. And of course, the last is really around ease of doing business. I think there's just way too much compliance and way too much stress which is put in that space. We have to just ease it out more from the context of proportionality, size of business, and just the nature of the business, because otherwise you're not going to see this segment do better? And therefore, what can the budget do to address and make it easier to start businesses? Because I think that's also equally important. We need to be able to encourage more entrepreneurship, which Gopal actually referred to, because we have wonderful minds in the country. So how do you channelize that?
During the pandemic, we noticed, in fact, we discussed this earlier also, many of the wealthy from India actually invested abroad. Because of the India growth story was still being observed, there were incentives abroad, investment, gold and others, rather than investing in Indian entrepreneurship. How can that be brought back? What are the few things that the budget can do to actually get invested in the high net worth individuals, the wealthy, and to invest more in the India story? Is there anything that the budget can do on that? Any to three of you?
I don't mind just taking a crack at that. Initially, is really that when they tried to popularize public markets, you actually had, let's say, no tax on dividend. You had no long-term capital gains and only short-term capital gains, because it just meant that you could actually push and incentivize people to invest in financial assets in that asset class. I think something similar needs to happen here in terms of, particularly on the alternative investment side. It needs to come through, so that you can actually get greater participation. I think that's one requirement. The other, in terms of just investing internationally, I think that was more from the lens of just diversification. Good diversification in investments means that you diversify geographically. And I think most families were looking at it through that lens, not necessarily from the fact that they don't have faith in their own economy or otherwise, because I think fundamentally, 95%, 98% of your assets are still sitting in India.
Make sure that people don't have disincentives. Like, for example, unlisted shares being taxed at double the rate. These wealthy folks are really the folks that represent Atmanirbharta in its purest form. They're self-reliant. They have the confidence to invest in India, where the business wealth comes from, and they have the confidence to also invest abroad. But if you give them disincentives and saying, boss, startups may invest mat karo, public market mein share dal do, it is a very wrong message. So I would say that is the main thing to do, and not worry about how they do asset allocation. One specific thing, I'm just still hoping that AIFs will be given the same tax treatment as listed shares are in some form or the other. We made many proposals to the government. I'm hoping that comes, so that startups and grow-ups and stand-ups and soar-ups all have, don't have, it's really, I feel emotionally as an Indian, and I put myself in the category very unabashedly as a very nationalistic Indian. Basically, to say that take risk, get punished. Don't take risk, get rewarded. It doesn't seem right.
A specific measure I would look for is to create a mechanism or institute either a committee or something to simplify the tax regime. I mean, Gopal has been talking about it, Soumya has been talking about it, and everywhere we have been talking about. We have seen this, but what the finance minister can say is that I'm instituting this kind of a committee with a time horizon, maybe 6 months, 1 year or something like that, to make it very simple. Anybody, see the income tax, I mean, if I take half a minute, the income tax return was very, very complicated when I started filing my returns, long time ago. And I would not be able to do it at that time. You had to go to some tax consultant or somebody. And now it is possible. Similarly, many of these things have to become simpler so that there will be transparency. A lot of efficiency will come in. And in the process, the government revenue will also go up. The productivity capital will go up. That's all I wanted to say.
Yeah. Thank you. Ms. Soumya, you have the last word in this. I normally give it to the professor, but it's your prerogative here.
No. Thank you for that. But I think really, as long as the budget can focus on solving the pain, which I think the MSMEs and family businesses are going through, really in terms of their cash flows and credit access to credit, that has to ease the pain. for us to come out of the pandemic, because it is a resilient group. It has stood, withstood decades, generations, and the budget needs to recognize that and support that.
So a specific provision like of the other two have mentioned.
I would actually say a bad bank has to be created so that the free flow of credit can happen, and to a certain extent, even credit guarantee schemes, I think for the MSME segment should come through.
So as a bad bank, meaning all the NPAs of all the banks are put in a one bank.
Yes, it can be a bank, but a bank may require a lot of capitalization, but you can do it through an AIF structure. So if you take it out, then have a group of professionals manage that. That means the capital which is there in the existing banks is used for good credit to be given to the MSME segments or family-owned businesses. That's what's needed.
Yeah. Thank you so much. Thanks very much, three of you, for your time. Very important. Hope some of these provisions at least we get to see in the budget. And thank you so much for your time.
Thank you, Kumar.
Thank you, Kumar.
Thank you, Gopal. Thank you.
Okay, thanks, Soumya. Thanks, Ram.